Welcome back, guys, to Crypto Deep Dive. This is your host, Mehdi Farouk, Senior Investment Analyst at Token Metrics. I hope you guys are having an amazing start to the new year. Lately, markets have been a bit choppy, and I hope that hasn't been very much detrimental to your portfolio. That being said, I have 22 predictions for you guys for the year 2022, and these prediction I hope will help you guide your way in terms of building a better portfolio and in terms of even thinking about how crypto market will evolve. Um, these predictions are not coming out of thin air, guys. I've worked really hard on them. Um, I've spent a lot of time thinking about them, chatting with different VCs, chatting with different builders, and these are accumulation and synthesis of my views of both the public market as well as private market. So without further ado, let's just jump into it, and I hope one of these themes might catch your attention, and you might build your portfolio oriented towards that theme. Before we start, I just want to quickly highlight that these are some of the trends I see, and this does not solicit any investment advice. So, the first prediction I have for year 2022 is that Ethereum 2.0 will, its proof of stake at least, will happen by the end of 2022. If you see Vitalik's blog post, if you see his appearance on different podcasts, and if you see some of the developers and researchers within Ethereum, they're pretty confident that they will be able to deliver at least the proof of stake. And since you already have the narrative of Ethereum killer gaining traction lately, I am pretty sure with high probability Ethereum proof of stake will be delivered. So that's the first prediction. The second prediction is I feel alternative layer ones will achieve a higher growth rate. And some of my picks are Solana, Luna, AVAX, and Near. And I believe cumulatively these layer one will flip Ethereum's market cap. And it kind of makes sense because all of these layer ones have become blue chip lately and have some kind of a trade-off. So Ethereum focuses more on decentralization and security, while some of the other layer ones are basically focusing on scalability. And so there is definitely a product market fit because Ethereum was lagging behind in that area. My third prediction is the layer 2 ecosystem will experience higher growth rate than Ethereum, primarily because now the new architecture of Ethereum 2.0 will rely heavily on layer 2s to kind of scale up. I believe initially the layers 2 will be abstract and generalized in nature, meaning it will be general purpose and anything and everything can be built on it. And within that name, you kind of see Matic gaining a lot of traction, and I think it will achieve top 10 market cap. I think the performance might be a bit choppy in the first quarter to second quarter because new layer 2s will emerge, let's say Arbitrum and so on and so forth. But I believe the ZK rollup theme will pick up at the second half of 2022, and Matic, I think, will be at forefront because they are also kind of thinking about it. This has been interesting. I feel like multi-chain layer ones as well as layer zeros. So your Solana, not your Solana, sorry, your Atom, your Polkadot, your AVAX, and your Near will, in my opinion, outperform monolithic layer ones. So at the moment, the monolithic layer ones are your Solana and your Cardano. So there's definitely scope of these protocols outperforming monolithic layer ones. Monolithic layer ones, I believe, will get very congested. So Ethereum at current state, Ethereum 1.0, it's basically monolithic. Ethereum 2.0 will not be monolithic. It will basically scale by rollups. So those chains that are monolithic in nature, I think, will underperform. This is my opinion, and I've been a strong proponent of this, having a layer zero architecture and basically trying to create internet of blockchains. I believe we didn't see Cosmos and Polkadot fulfill its potential maybe the architecture was complex and they were working on it, but I think 2022 will belong to them. There are a few reasons why I believe that it will belong to them. Firstly, your Cosmos IBC is already um, delivering, and I think in few months' time you'll also see XCM, which is cross-chain messaging protocol of Polkadot, uh, being fully functional. And I think when that happens, a market will wake up to layer zeros potential, and I think you will see big rallies. I think the rally will initially be initiated by Cosmos, most likely in first quarter to second quarter of 2022, and in the back end of 2022, you'll see Polkadot rallying. I think for next 9 months, Polkadot might still not be outperforming, but I think in later half of 2022, the outperformance will start becoming more visible, since a lot of different parachains will start communicating between each other, which I think will be amazing. Another prediction I have is that UST will become the second largest stablecoin behind USDT. And I believe this makes sense, right? I think you need within crypto, you need a decentralized currency which is not pegged by dollar. So when you introduce dollar within decentralized systems and decentralized blockchains, you basically also bring in monetary policy of Fed, US, and global monetary policy towards the working and business of crypto, which which means that they tend to act like risk asset because a lot of transactions happen within stable coins within these cryptos. So I believe this is something which will change. A lot of market participants and agents within crypto will realize this, and I think UST will become the de facto algorithmic stable coins. I also feel like you'll have more experimentation with regards to algorithmic stable coins, and you'll also see a lot of people copying the model of UST. But I think it will be too late by then. A lot of people forking UST. I think it will be too late. So the way UST works is it's not backed by any collateral. It's not backed by actual dollars. It's backed by the Terra ecosystem economy. So if the peg breaks, let's say if $1 to $1 peg breaks and it goes higher, basically more Luna gets burned and Luna price goes higher. If the peg breaks below $1, more Luna gets minted and it's sold out in the market to basically buy back UST. So this is the mechanic through which it works. Up till now, it has worked really well, and I believe it will actually surprise us in 2022. I think this is my favorite prediction, and I'm a proponent of index investing for retail clientele. I believe decentralized crypto indices, such as, let's say, Metaverse Index or DeFi Pulse Index for that matter, could become very viable investment vehicles and option for investors. And I think it will become increasingly popular, I think, in 2022. I also believe in the second half of 2022, you'll most likely see L1 infrastructure project and DAO indices popping up, and I will be more than happy to kind of incorporate them in my own personal portfolio. I think it's just easier to manage it like that. And if in 10 years time, 6 to 10 years time, if crypto does become $100 trillion industry, 50-60x returns could be generated from these index level exposure just by putting in and parking away the money in indices rather than selecting particular coins, which may or may not do well. I've already written a thesis on this, and I think I'm not going to elaborate much on this. I feel like blockchain gaming projects which have useless gameplay will underdeliver. A lot of blockchain gaming right now is banking on play to earn. I personally don't think play to earn is the future. The logic is very, very simple. I think for a good gameplay to kind of release dopamine and lead to mass adoption, you have to incentivize gamers with unpredictable rewards. So if you have unpredictable rewards, game psychologists and game economists believes that the gaming experience is much higher and gamer gets addicted towards that. I think play to earn does two things. It makes people play games just for the expectation of earning, and those earnings are not sustainable for the long run. So once this earning dies out, gamers go away. Second thing is P2E, I believe, helps you on the financial side, but kind of deters away from the experiential part of the gaming. So, for example, if you are a skill-based gamer who focuses on first shooter games, I feel like it will be very difficult for people to kind of incorporate play to earn mechanisms there, because those games are basically skill based. So I think there are a few things that industry will get clear on it. I'm a bit bearish on the play to earn part of it, at least those games that just primarily focuses on it. Thing I'm more bullish on. So if you can see the single symbol over here, the bear over here basically implies that I'm bearish on this theme, while Rocket and Moon kind of indicates my bull thesis. I feel like AAA gaming studios will enter crypto gaming and NFTs, and those will be the project I'll be very interested in terms of getting exposure. Now I think we are starting to go into the weeds of NFTs, gaming, DeFi. But I said earlier, like when I presented you my thesis with regards to layer one and layer zeros from 1 to 6 predictions, I just didn't do it out of thin air. I'm not like Fed. I don't print money out of thin air. All of this was done and backed by actual research. So one of the research I would like to share with you guys is done by Electric Capital Developers Report. And so if you read the whole report, you'll get a sense of why I made this prediction that L1s, alternative L1s will outperform Ethereum. So if you kind of see this report, I'm just giving you the executive summary over here. So firstly, in terms of the number of developer commits, crypto has done really well. In terms of new developers coming into crypto have done really well. Largest ecosystem at the moment in terms of developer activity and in terms of a number of developers active is at the moment Ethereum, but you also have Polkadot, Cosmos, Solana, Near, Avalanche, Tezos, Polygon, and Cardano. Each have 250 monthly developer. But what thing that strikes me out is that Polkadot, Solana, Near, Binance Smart Chain, Avalanche, and Terra are growing faster than Ethereum did at a similar point in its history. So even though at the moment Ethereum has high amount of developers, but these projects in terms of developer count working uniquely on the project is growing at a faster rate than Ethereum did at its initial pace. And I think these projects will also have EVM machines. So if these projects do well, and then you have EVM machines, a lot of developer from Ethereum will also kind of diversify away and build on these ecosystem. So I think there's definitely a chance that these ecosystem will outperform Ethereum, and that's why it kind of also makes sense to kind of have a slight more portfolio tilt towards this alternative rather than just Ethereum. So that was still thesis number 9. Now let's jump into thesis number 10, prediction number 10. I think NFTs will expand beyond profile picture play. I think gaming will be the first and most easy way to kind of implement NFTs. You'll see game assets, swords and bridges and armors and lands, gaming lands being sold and bought and transferred from one game to another. It's a very simple application, but I think unique applications in music, like music NFTs, for example, with basically NFT certificates and concert tickets issued by creators, sports economy, metaverse. I think all of these sectors will start to dabble around with NFTs in unique ways. I think we're too early with NFTs, and if I speak with some of the developers as well as some builders, they think that NFT might be even bigger than Bitcoin was in 2013-14. So they are very excited about NFTs. And I feel like at the moment, it doesn't make sense for me to make concentrated bets on, like, let's say, one JPEG, one profile picture. I think we need to have index level exposure, broadest and widest exposures. So any subsector within NFT, if it blows out, we can at least capture some of it. So my picks in terms of index level exposure is Affinity and Unique Network. Affinity and Unique Network are both on Polkadot. So I think they'll be interesting. If you don't like Polkadot, I think Engine is another one which will be interesting. Now, apart from that, there are some NFT projects that are basically pushing the boundary of innovation when it comes to NFTs. So I think Remark is another one. I have done a deep dive on it, which you can check out. And I've also invited the founder to the 100x show, and you can check out the uh, podcast interview with Bruno. Remark is another, it's no pun intended, it's a remarkable project in terms of application of NFTs when it comes to DAOs and metaverse. So I think it's another project which is very interesting. So let's go to prediction number 11. Prediction number 11 is basically a combination of DeFi, NFT, and gaming in tandem. So imagine a situation where all of these three primitives work in tandem and work together. So, for example, imagine a case where you can lend or borrow against your NFTs, and that NFT is actually a game asset that you acquired playing a game. There's a protocol called Arcade, which I think is not public yet. I think it's working on this composability element of different sectors, combining NFT, DeFi, and gaming. So something of an interesting theme to have a look out for, and I'm quite bullish and interested in these kinds of primitives playing out, not just from investment perspective, but just in terms of intellectual curiosity, in terms of how crypto is being pushed forward ahead, and it's just lovely to see these kinds of innovation kind of forming in front of us. Okay, so my prediction number 11, prediction number 12 is metaverse. Regarding metaverse, I think metaverse will start maturing. They will now start representing more than just games and like more than just some clunky avatars. I think one use case which I definitely kind of see is office calls and meeting happening on metaverse, and I think there are few projects out there that are trying to capture that. I think one is Pax World. They haven't done an IDO yet, but I think the IDO will be imminent in the near future, and they're trying to integrate voice calls and video calls with metaverse. And I feel like with COVID, remote work has become a commonplace. So having meetings there and just working along and doing teamwork with your colleagues in a metaverse, it's a very simple to execute application, and I think we'll see more of that in the near future. Virtual lands, I think they will increase in value tremendously going forward, especially in those kinds of metaverse which have strong network effects. So your Decentralized, your Sandbox, your crypto voxels, these type of primitives will acquire a lot of value when it comes to their virtual lands. We recently saw Samsung, I think we saw it yesterday, if I'm not wrong, Samsung buying a piece of land in Decentralized, and you'll see blue chip companies, multinational companies acquiring land in metaverses to kind of have an extension of their website and not to kind of miss out. I think multinational companies, not just retail client, but multinationals also kind of have this behavior that they do not want to miss out. So you kind of will see FOMO into virtual lands, and I think these metaverses will benefit. If you have the resources, if you have the money, maybe dabble around with the virtual land yourself. I feel big brands will use NFTs in terms of airdrops and stuff to kind of increase their brand awareness and recognition. And I'll go even one step further by saying that they will even subsidize the cost of minting NFTs. I think some of the networks like Affinity kind of allows developers and big brands to kind of subsidize those NFTs and let them pay rather than user paying through gas fees. So I think big brands will use NFTs to increase their coverage of different promotions, marketing they have for us. This is another interesting one. I think blue chip NFT projects like CryptoPunks and Bored Ape Yacht Club will do really well, and I think a lot of penguins and punks and apes JPEGs will just die out. I think blue chip is where a lot of FOMO is, and a lot of FOMO will be. And I think there are so many NFTs out there that only concentrated, well marketed ones will survive. There's a concept in economics called Veblen goods, and I think some of the blue chip NFTs, let's say Bored Ape Yacht Club, CryptoPunks, and maybe the meme of Dogecoin, have achieved the status of Veblen goods. So I think a lot of these other JPEGs will just die out because they don't serve the purpose. While these blue chip will serve a purpose, and I think there'll be few triggers for them to kind of still accumulate a lot of value. So they will be available widely and vastly in terms of fractionalized representation of them. So investors do not have to own the whole JPEG; they can own a fraction of it. I also believe these blue chip NFT represent more than just JPEGs, right? So you can think of these NFTs, these blue chip NFTs, as membership card of a community, and you can also kind of use them on Twitter to kind of send signal that you are wealthy and you have status, and you can slide into other influential and wealthy people who own these NFTs, and you can slide in their DMs easily. While they might not respond to someone else, but if, let's say, if you have boarded Yacht Club NFT, you will be able to easily have access to the network as well as approach them on Twitter, and maybe in the future in NFTs. So something to be wary of, something to be mindful of, and something which will, I think, grow a lot more attraction. We also saw Eminem buy one of this Bored Ape Yacht Club NFT. Kind of expect similar kind of behavior in 2022. I think security tokens in Q4 of 2022 will start picking up as a theme. I have few favorites. I think Polymash, Swap, Levin Swap, AVAX. I think these are some interesting plays that you can do. I think real estate, VC, private equity, public and private market equity, it represents between 150 to 200 trillion dollar market capitalization, and I think you can capture that theme and make those assets come to blockchain and get exposure through them via these tokens. My prediction number 17 is regarding DeFi. I think DeFi sector will fix its tokenomics and it will move beyond just being Ponzi schemes. We thought the DeFi summer kicked off because of high APIs and APRs, like high yield farming rewards, and then died off when these yield farming rewards died out. And now you kind of see emergence of reserve currency Ponzi schemes like OHM and Time and Rome DAO. Even though the community is really strong, but they are kind of like, in terms of the tokenomics, bit of Ponzi. I feel like DeFi will sort its tokenomics out, and the focus will be on pure and amazing token utility rather than just giving out high returns, high APYs, which are not sustainable. My prediction 18 is regarding one of the hottest theme within DeFi. I think crypto structured product like Ribbon Finance, for example, will become one of the hottest themes. I think DeFi needs options, futures, perpetuals, and other interesting fixed income properties. So traditional finance folks can jump in and also provide interesting and more complex yield farming strategy for some of the power users of DeFi. So I think this will be one of the themes I think a lot of builders are working on, and you'll see more protocols like Ribbon Finance pop up. Prediction number 19, I feel like protocol owned liquidity, for example, projects like Tokemac and OHM, their bonding process. I think these type of primitives will become much more common because one of the issues DeFi had was that the liquidity was mercenary. It was very short horizon oriented, but I think going forward, that won't be the case, and a lot of protocols will take lesson from Tokemac, and these protocols will act as LAS kind of a service. So you know about SaaS, but I think liquidity as a service will also become a primitive within DeFi, and projects like Tokemac will capture that. Not saying I'm bullish on Tokemac, but I think projects similar to these primitives will emerge in different chains, and you can basically be an early part of them going forward. Another cool thing about Curve Finance was the way that token governance token was designed. So let's say you had to stake Curve, and if those Curve was staked for a longer duration, your voting right increased in line with the time you kind of staked it for governance. So I think these type of voting lock mechanism will become a norm going forward for DeFi, because it also decreases token velocity within the network and allows the token to appreciate more because the token is staked for longer duration. And I think this will become very common going forward. Now, prediction number 20. I think crypto as a whole will become less correlated. I think you have plenty of different sectors emerging and they have their own fundamentals. You have layer 1, layer 0, DeFi 1, DeFi 2, gaming, metaverse, DAOs, and money markets like let's say Bitcoin. So I think these sectors should have their own price action, own valuation, own expectation, and I think market has started to slowly price that in. Prediction number 21. I think this will be the most controversial prediction I have. I don't think Ethereum will be able to flip Bitcoin, and I also don't think Bitcoin will be able to reach 100,000. Now, I am pretty positive that Bitcoin will not reach 100,000, and my rationale goes like this. So at the moment, Bitcoin is 45,000, between 40 to 45,000, and it's 1 trillion market cap. Now, if you look at gold, if you exclude the usage of gold for central bank and jewelry in some of the parts of the world, the market cap is $4 to $5 trillion for gold. So already Bitcoin has captured 25% market share of gold. Now, if Bitcoin goes to 100,000, that means Bitcoin has to capture 60% market share of the gold. Now, if Bitcoin captures 60% of the market share of gold, and gold has been there for thousands of years, something significant has to happen. Either there's a hyperinflation event, or basically US dollar basically loses as a reserve currency status. I personally feel like both will be life-changing events. These type of events happen once in centuries, once in like few centuries, and I don't think it will be that soon. Maybe Bitcoin reaches 100,000 in a few years, but I don't think it will reach by 2022. If it does, and if you see this video when Bitcoin reaches 100,000 and you tweet out, maybe you were wrong, I think there's a high likelihood that when that happens, inflation has become a problem. It has become beyond our control, and central banks have lost their credibility. And even though the Bitcoin reaches 100,000, a lot of our altcoins will have crashed because there will be a lot of selling pressure, because altcoin also acts as a risk asset, in my opinion. So our bags of altcoins won't do well. So it will be a zero-sum game, in my opinion. Final prediction, I think venture capital and centralized exchanges will keep on dominating the crypto sector, and their dominance will increase further. One of the trends I'm seeing is that venture capital arm and central exchanges are kind of combining together and providing vertically integrated and horizontally integrated services end-to-end for crypto customers. So let's say you have Binance, it has its own venture arm. You have Coinbase, it has its own venture arm. You have Gate.io, it has its own venture arm. Same goes for Qcoin and other centralized exchanges. Not only they have their own venture arm, they also have the labs where they help incubate projects and also kind of give them grants and funding. So all of these services will make them very dominant and will allow them to control the funding of crypto projects as well as deployment of crypto projects, and also acting as an on-ramp fiat exposure, like also acting as an on-ramp for investors to kind of buy crypto projects. So I think they will also kind of grow in dominance and will also become sort of like an investment bank as well as Amazon of crypto going forward. So one of the themes to kind of look out for, and I think crypto needs more community-oriented approaches and also need more grassroots movements. So let's say Frog Nation, even though I'm not a big fan of TIE, but I think that movement is kind of very unique and has a very strong community community. And I think that's the ethos of crypto, which I feel like venture capital and centralized exchanges tend to dilute. So guys, these are some of my assumptions for 2022. I hope you enjoyed this week's deep dive, and I hope you have a healthy as well as wealthy 2022. Thank you.